Well, welcome everyone. I'm Fred Willerup. I'm a CTO at LeanLaw, and I am joined by Chase, head of
customer success. Yeah, is that what I
LeanLaw. You might have heard from him in the chat or other places. But yeah, we are doing our monthly masterclass. The purpose of these classes is to go deep on some topic in the product with the aim at you getting more value out of it, essentially. Hopefully, by attending this, you would be able to, improve some workflows in some areas or spot a feature that might help you save some time every month or every day even. So that's the idea here. And the topic today is expenses. So the expense workflows in the LeanLaw product. We're going to go through first kind of a high level, kind of conceptual kind of drawing of what it is. And then we're going to dive into the product afterwards with some demos. At the end of this session, so probably with about 10 minutes left, I'm hoping, we'll also show some new features in the product. So we'll get a chance to talk about other things than expenses. Throughout this, I would love for you to just come in with questions in the question feature in Zoom is the best way. And we will almost always be able to answer those questions live. And it makes it way more fun and interactive if you just kind of pop in with questions and we can try and answer them for the benefit of everyone. Did I miss anything, Chase, on that kind of high level note?
I think that pretty well covers it.
Excellent. All right, expenses. There's two things we're going to cover here. Primarily, there's the expense workflow and specifically expense syncing from QuickBooks. That's the key thing we're going to be talking about today in some depth. If you're not using expense syncing with QuickBooks, this is a great session for you. If you are using it, there might be some stuff here you can pick up that you're not already aware of. And then we're going to talk reporting as well as it relates to expenses. Those are kind of the two big pieces. I'm going to start by making it some kind of drawing out the expense workflows in QuickBooks in LeanLaw.
And we've been jamming out on these whiteboards for the last couple of master classes, and even internally have been really enjoying them. So if you found them to be useful, do let us know, and we'll start including these in more of our communications, and maybe even in support if they're effective enough. Right.
There's going to be two high-level pieces here that we're going to talk about. We have QBO, and then we have another piece here, which is LeanLaw. So everything below here in these sort of general areas relate to those two products. Here's one scenario. You have, a credit card coming in here. Here's a little credit card. You get charged $100. How do we bill this on to the client? That's really what we're talking about here. There's an outgoing expense from your card or from some other part of your firm, and we want to see how we recover this expense. So this credit card charge comes into QuickBooks on a bank account. Now we're going to talk in some detail in here in a moment, but the high level idea here is that this charge flows over to LeanLaw, so it's available for billing. So we have this $100 coming over to LeanLaw. We now see it on the expenses page. If you can read that, there's a bunch of expenses showing up in there. And one of them is going to be this $100 charge coming from QuickBooks. And then, when we're ready to do our billing, we use LeanLaw to put this on an invoice. There's an invoice. It has a bunch of other stuff, maybe time and so on. And here's our $100 charge. This is a draft invoice. When we're ready, we send this invoice over to QuickBooks, and it becomes a real invoice. And then we send that on to the client, who's down here, hopefully happy to see this invoice and pay it. And then, so here's the $100 again, and now the client pays. So it's kind of obvious, but I'm going to fill in some detail here that's going to, and it's going to make sense why I drew it this way here. So this is the high level idea, all enabled with this sync piece here in the middle, that we have automatically charges in QuickBooks flowing to LeanLaw for billing. Now, let's go into a little more detail, specifically on the, actually I meant to use some other colors, but we'll keep it black and white here.
Nice and easy.
When this charge comes in, you will normally see it in QuickBooks, or you will mark it in QuickBooks as an expense transaction. So here's an expense, and it's $100. Now we get to some accounting bits, which are either trivial for you if you're a bookkeeper or familiar with accounting, or maybe a little confusing, but bear with me for the people who already know this. The expense item here of $100 is assigned to an account in QuickBooks. And we have a special account that we call prepaid expenses by default. But you can call it something else. A lot of firms call this advanced client cost. That's another very common name for this account. When we assign this expense, it will be added to this account, or debited, I believe. It's an asset account, so it'll be added to this account. And now we know that this is something we need to recover at some point. Now, the cool thing about this whole flow is that as soon as we create an invoice with this charge on, because of the way this is set up, this line item on the invoice will automatically create another line item in this account that's a negative or a credit, which accountants write with a parenthesis, and us normal people put a minus here.
Accountants are people too.
Oh, sorry. So now we have the full picture. An expense comes in, it gets added to this account. Once it gets billed, it gets removed from this account. And this is key because it cancels each other out here. So over time, if your prepaid expense account is 0, it means that all the expenses you meant to bill onto clients were indeed put on bills. If you have a positive balance on this account here, it means you still have expenses sitting out here, maybe in ready to bill that you haven't billed onto clients yet. Of course, you'll always have some expenses sitting there, but it's an important account that kind of keeps track of the ingoing and outgoing of your expenses that you manage for clients, or that you want to bill onto clients. So that's kind of the high level. This picture here kind of shows our expense syncing feature, including the accounting bits. The key thing here is that it's all pretty much automated. The only sort of manual step here is, I'm going to put a red thing in here, is that you have to assign this expense here to this account. That's an active thing that a bookkeeper needs to do to make sure it's available for billing to clients. You might have other expenses that you don't bill all to clients. So there's this active assignment here that makes it flow through here. Now, Chase, when we get to the demo, we'll also talk about assigning it to the right client and so on.
Yep.
But that's that detail we'll get into. Now, this is what there's a shortcut here. There's actually a way where you can just write in here, add an expense, let's say $50 in here. And now it appears as another expense in here. This is called, this is sort of a shortcut that does not put that expense on prepaid expenses. It doesn't work with the syncing. And we call this soft cost. And the other flow that we looked at over here, we call hard cost. And it's called hard because there's an outgoing component to the expense, like it's something we paid. And soft cost, that's stuff we want to recover from a client, but there's not a direct outgoing component. It could be, what's that, sorry?
Usually in the form of a receipt or an invoice that you or the firm receives.
Right. So just to complete the picture here, the soft costs and the hard costs all go together on an invoice. In this case, let's say we have both of these expenses on the same invoice. So I'm going to throw them in here. The difference is that once it goes to QuickBooks, it goes, instead of to the prepaid expense account, it goes to an income account. It's typically called billable expense income, but you know, you're going to have the $50 appearing here. So from an accounting point of view, these soft and hard expenses, whether you enter them in LeanLaw or whether you enter them in QuickBooks, they're treated very different accounting-wise. And Chase will show later how you kind of set all this up, but that's the big picture. And if this seems confusing and you're not taking advantage of this syncing feature, I'll encourage you to talk to your bookkeeper or accountant about whether this can be enabled, because it really saves a lot of headaches for a lot of our clients. I took a quick look before this meeting or this class, and about 60% of you use this feature. So there's 40% of you, I think, could really benefit from this. Did I miss anything, Chase, or do you want to jump into some demos?
See. I think the only thing really that I've got a question about is, does this apply only to expense items in QuickBooks, or can we perform this with other items like journal entries or bills?
Thank you. Yeah, the way it works is, I'll just randomly pick a different color.
Yay, green.
Is that we pointed to this account. We point LeanLaw is basically monitoring this account and any sub accounts, by the way. They can be organized in sub accounts. And then we sync over any expense or check. So if you write a check and assign it to this account, it'll sync over. Or bill. So, you know, you might have a bill that you need to pay. This can be synced over. And then finally, a journal entry, which is a more general purpose accounting thing that can, do magic. But essentially, anything that's sort of assigned in here will flow over and can work this way here. So great. I missed that part. All right. Any other? Do you have any questions out there for the big picture here before we dive in, or the accounting, or?
I'm not seeing any questions, so I guess that means everyone here is already an expert at expenses.
I'm a little shocked that an accountant didn't point out some issues that I'm not an accountant, but I think I must have gotten this more or less right, miraculously. All right, Chase, why don't you take over the screen here and let's see some of this in action.
Yeah, absolutely. Let's flip over here, get some things rearranged. Oh, there we go. All right. So I'll go ahead and share my screen here. And just for reference, because we definitely will come back to it later, I do have a copy of Fred's fantastic drawing. We'll go ahead and reference this later for everybody. But what will I be covering? So to start, we're basically going to follow the recipe that Fred has drawn here for us. So we'll start with what the expenses look like in QuickBooks, the first stop here. Take a look at what those look like. We'll then sync them over to LeanLaw, see what they look like in LeanLaw. From there, we'll put them on an invoice and ship them off to QuickBooks. And then once they're in QuickBooks, we'll take a look at what happens in the prepaid expenses account or in that billable expense income account like Fred was talking about. Thomas, to answer the question, yes, this applies to all versions of LeanLaw. I believe that expenses work the same in Pro and Core. The expense sync is a pretty standard or not basic, but an essential feature of LeanLaw. And so that's made available for everyone. There's another question. How does a journal expense go to the prepaid expenses? It's going to follow the same steps that we'll check out here in a second. It's just that instead of being an expense type item, it's a journal entry type item. But so long as it's set up the same way, you can still use journal entries to create expenses in QuickBooks and then sync those over to LeanLaw. So Khalid, if that doesn't answer your question, we'll come back to it later and ask me again once we've gone through the couple of steps here. So first thing we're going to do is take a look at an expense in QuickBooks. Go ahead and pick out our account there. We'll go to our expenses tab, and the one that we'll be taking a look at is this $587 expense here. Go ahead and click on this.
Strictly speaking, a bill, but
yes. So we were talking about how it can be a bill, an expense, a check. Same thing here. This is a bill item instead of an expense item, but all of it will sync into LeanLaw still to follow that process. So this is our bill that will become an expense in LeanLaw. What are the key things or key components here? Well, the first off is the category. Fred mentioned we need to point the expense or the item at a specific category. And here it's the prepaid expenses. We've made it easy by adding a hard cost there in parentheses to follow. The description, the amount, and then the client. Now, like Fred mentioned, it's important that we pick out the client that this will be associated with in LeanLaw so that when we create the invoice, we know who it's supposed to go to. If you don't add a client, LeanLaw will ask you, LeanLaw will say, hey, it looks like you've got an expense or a couple expenses that aren't assigned. They'll pop up as unassigned expenses.
Chase, we're going to show all that detail later. I think you want to just kind of see the high level idea here first.
Okay. We'll get into more of that later then. So important things here, category, client. So long as you have both of those, they'll sync into LeanLaw. Now over in LeanLaw, we'll go ahead and give that column header a tap. There we go. On the 20th of May, we've got that $587 expense that created in QuickBooks. And because we put the correct category and client, it's now synced on automatically for us. So easy peasy. Next step is to include this on an invoice now. So if we go to billing, go ahead and set our client here to Jackie. There we go. We'll go ahead and just quick create that invoice. Now, if we go take a look at our drafts, scroll down to our expenses. We've got right here, this is a new bill, fantastic description, $587. So now able to approve that, ship that off to QuickBooks, and we now have a real expense or a real invoice containing that expense that we were using. Uh-oh. Looks like we're missing some descriptions here on these expenses. Yep, that one right there. Quickly revert that back to drafts and add an expense there. Actually, we'll just remove it entirely. Let's approve and submit to QuickBooks. Great. Now, if we go back to QuickBooks and we go check out our list of invoices, under sales and invoices. Uh-oh. There we go. And of course, right as I refresh the page, it loads in without issues. So that invoice is now over in QuickBooks for us. So we have now, to kind of go back to the picture and follow through, seen what it looks like in QuickBooks, synced that over to LeanLaw, gone through the draft phase, sent it off to QuickBooks, and it's now a real invoice, which means, because this is a hard cost, if we go check the prepaid expenses, we'll now see that that $587 is now captured there. So if we go to our chart of accounts, give that a second, and then check out our prepaid expenses or hard costs, we'll notice, hey, look at that, $587. And then when we get that paid, that will now be, well, actually, we've got both of them here, the increase and the decrease for both of those.
Right. Perfect. Yeah, it's just the act of putting it on the invoice that counteracts it here. The payment of the invoice is a separate matter. So, excellent, Chase. Now maybe take a little extra look at what happens when we create an expense or some items that does not have a client assigned.
Yep.
In QuickBooks, and then what happens there?
Doesn't look like we have any already, but that is a-okay. We'll just go ahead and create one. It's good. That means someone's been keeping track of their expenses. So if we go to our expenses, go ahead and set the category to prepaid expenses, because remember, that's what we have set up to sync to LeanLaw. We forgot a client. That'll be our description, so we know which one to look for. And we are not going to set a client here. We'll set the payee to us. Should not be...
While you're sort of saving that and so on, I can mention here that sometimes it's not just about forgetting which client to assign here. It might be that the bookkeeper or whoever is in QuickBooks assigning credit card transactions to this account. They don't necessarily know which client to pass this on to. So it might be perfectly reasonable to leave this client field blank. But let's see how we get it assigned once it flows to LeanLaw.
Go ahead and refresh LeanLaw here. Hey, look at that. You have one unassigned expense in QuickBooks Online. Go ahead and click on Assign Expenses, and hey, look at that. We forgot to pick the client in matter. There we go. So now when we save, and for some reason it's not giving me the ability to add a dollar amount, which means I probably created that expense incorrectly, but you get the idea. If there's no client selected on that expense, it will pop up here. And then once we go through and set the client in matter, we can now include this on an invoice, just like we did with that other expense.
Yeah, I wonder what went wrong there. The other scenario is that you might have assigned the client in QuickBooks, but if you have multiple matters under that client in LeanLaw, you'll have to assign it over in LeanLaw to the right matter. An expense has to have a matter on it. It can't just be assigned to a client. So that's another scenario. But the idea here is that it get that little yellow box on the expense page. You also get it on the billing page, on the ready to bill page, that when you're ready to bill, you can see right here, oh wait, I've got unassigned expenses. We strongly recommend that you do not start your billing until this yellow box is gone, that you have indeed assigned everything, and then you start your billing. So there's a question about some issues with the save button looking funny on this page here.
Yep.
Yes, we are. I'm actually going to show something later here that addresses that. But thanks for pointing that out, Emily. I think maybe we should get back to the journal entry question, Chase. If you can go to QuickBooks and just open up a journal entry. There was a question about how do you assign a journal entry to this account. It's really quite simple. There's two components to a journal entry, the debits and credits. So you pick the account here, the prepaid expense account, and any debit going in here will flow over to LeanLaw. So this means we paid $100 to something. Now there needs to be a corresponding credit when you create a journal entry. So I don't know what the example here would be, but that would have to be in here as well. So hopefully this helps to answer that question. I think we covered that. Chase, there was one. There's another feature that once an expense comes in, that we have this feature amongst those buttons that were showing up down there. Under the yellow box and opening the expense. We have the delete from LeanLaw feature here. And I want to just pause on this a little bit. What this does is you might have an expense that came in and you're like, wait, I don't need to bill this to a client. So you can click this button and it goes away from LeanLaw. It stays in QuickBooks. Two notes on that. One, there's unfortunately not an undo for this. We apologize, but if you do this and you didn't mean to, contact support and we can undo it for you. A little clumsy. But more importantly, maybe it's probably not likely that you should ever use this. If an expense is assigned in error and does not need to be billed onto a client, you should actually go to QuickBooks and assign it not to the prepaid expense account, but to another account. It might be just an internal expense account. Because if we look at that picture I drew earlier, if we just have an outgoing component here and then just ignore that expense, we'll never invoice it. We'll never cancel it out again. There'll never be that negative amount to cancel it out. So if you see an expense in here that was never meant for a client, you should go to QuickBooks or have your bookkeeper in QuickBooks assign it to a different account. So sorry for the lengthy explanation there, but I'm kind of wondering if we should even have that delete from LeanLaw button there in the first place.
I don't know.
All right. So with that, should we show the soft cost, Chase? Because we've talked, I think, about the hard stuff. We try the easy stuff.
Yep, let's do that. And then after that, we'll talk about actually setting both of these up, because that's pretty important. Like you mentioned, since 40% of our users aren't using it, probably should cover how to actually set it up in the first place. So wouldn't you know it, setting it up in LeanLaw is quite a bit easier since we're skipping the first half of these steps. But we're basically going to be entering the same information. So instead of entering it in QuickBooks, picking out the category and the client, we'll actually just in LeanLaw click the create expenses button, or create expense button, sorry, on the expenses tab. And from here, we'll fill out similar information. So we'll pick our client matter, pick the date, give it a description. I'm going to use a template here. Give it an amount, and then save. Then we're done. That's it. But because I'm not responsible on it, it's not going to show up there. There we go. There's that expense. So now we go through the same process of putting it on a bill. Once the invoice, the draft invoice gets sent to QuickBooks, it's now real. And instead of going to the prepaid expenses account, it now goes to the account that we call billable expense income. So pretty easy on that one. Fred, did I miss anything before I skip to the settings?
I think I would just encourage everyone to take a moment and sort of internalize that difference. Like the create expense button here is for soft expenses, and other expenses, the hard expenses, are created or flow in from QuickBooks. That's the main takeaway here.
Yep.
So,
and keep in mind too that some firms prefer this method for different users. So I've seen quite a few situations. There's quite a few firms where the firm's bookkeeper and or accountant, because they spend most of their time in QuickBooks, will enter all of the expenses in QuickBooks anyways. Or sometimes they'll have the attorneys entering in those soft costs in LeanLaw. That way the bookkeeper accountant don't have as much work to do. So that process may vary firm to firm or based on your situation. But the difference between hard and soft costs is still there. So keep that in mind, that regardless of who's entering them, that if you're using those two different expense types, that you make sure you're entering them where we've covered. All right, on to the setup. So we're going to go to our settings and then the QuickBooks section here under integrations. Now, if you don't see these, it's because you don't have the correct permission set up. So either check with your firm manager or send your firm manager the webinar and say, hey, I'd like to see expenses handled differently. Now, this is an account that we've already got set up. Normally, the first time you load in, it would give you the option, or this button for expenses would say, hey, let's set up expenses. Well, we've already done that. But with a little bit of magic, we now see the exact same pop-up. So skip a couple of steps here. Now, it's going to ask us two things for each option, or for hard costs and soft costs. In both cases, we'll need to pick the asset account. Remember, because it's an asset account, ultimately we want it to be 0, but it's going to go up and down. We'll need the asset account, and we'll need a product or service to include on the invoice for the expenses that we're billing. So first step is to create that asset account. Now, LeanLaw in all of these will give you the option to click that and just create a new account in QuickBooks. We already have one set up, so we're just going to use that. But if you don't want to come up with weird, funny names, just use the default, that'll work just fine. You'll then pick the product or service. Like I was saying, this is the item that shows up on the invoice. Now, if this is your first time setting it up, you have the ability to sync in those hard costs that you may have already entered in QuickBooks, so long as they're in that prepaid expense account already. If they're not, they won't sync in. But this is asking, hey, from what date range would you like to sync those expenses in, if at all? Go ahead and click next. Now, this is a fun one that trips a lot of people up, but this is essentially asking, hey, do you want to use the same asset account or a different asset account to track your hard and soft costs? Most of the time.
Oh, sorry. You were probably going to say what I was just going to inject, but since I interrupted you already.
Go for it.
I think there is probably never a reason to pick same here. This might be in the same category of that red delete button that I said maybe we shouldn't even have in there. I don't think there's any reason not to pick different here. You really do not want to handle these expenses the same way. So that's the kind of short version here.
Yep. That's a little more explanative. That's not a word. A little more detailed. Yes, exactly. A little more detailed or a little more explicit definition, but yes, the default and the one you want to pick is different. And then we go through and actually set up the same thing for soft costs, but instead of being an asset account, this time it's an income account. So same thing, we'll pick that account and then we'll pick the product and service. Now, if you've already gotten these set up or you did it when you first started, you'll see edit expense settings here. And then if you click that, it gives us a nice overview of the exact settings that we just covered. but it shows all of them at once, giving us the account for both soft and hard costs, as well as the product and service for both. Now, there is a little checkbox here hidden away, the include vendor / payee names in the descriptions. If you want to include the vendor or payee name on the description of the invoice that is client facing, you're able to do that here. But I don't believe most firms actually use that.
Yeah, and they might not be aware of it. It's really handy if you have bills or expenses that come in. The description item for that bill or expense is unlikely to be enough for billing it on to the client. So I would seriously consider checking this because it means you don't have to edit those items once they get on the invoice.
Cool. So that's surprisingly straightforward, getting the expense sync set up. So just to kind of reiterate and come back to the picture here, the hard costs are the ones that we're entering in QuickBooks. That was the first account we talked about. And the soft costs, the ones that are entered in LeanLaw, are the second one that we talked about. So the hard cost of the asset account, soft cost of the income account. And that matters once they get sent to QuickBooks and then the way that they're accounted for later.